there's choppy water in every walk of life, but having that passion, it holds you above the waterline. It really drives you through, and when you know what you're doing it for, and that vision there, it becomes a potent force of nature. You've got to have all the options out there, and change is the only constant in life. You know, there's constantly going to be change.
Hello and welcome to the Developers Club podcast. I'm Ben Wilson, your host. Today I'm joined by Mark Stokes of Sustainomics Capital. Mark, welcome to the podcast.
Thank you for inviting me, Ben.
You're more than welcome. So I've obviously done my research on yourself, and we had a little chat prior to filming, and you've had you've done a plethora of things, from getting out of the rat race, as you refer to it, in your mid-40s and going into investment in property, investment in businesses. I mean, you've done a heck of a lot. So what made you shift from originally being in the corporate world into this property world?
Yeah, thanks. And it's been a long 30-odd year history for me. I have 4 children. Like many of you, legacy, kids are absolutely everything. I've been married for 27 years. And it got to a point where in 2014, I'd worked in 32 countries around the world. I'd delivered 4 million square feet of commercial infrastructure. I was running 7 different companies, and I was seeing less and less time of the ones I was doing it for. So for me, it was really a major shift, really, 25-year career. I sat down, it took me 3 months to sit down with the chief exec and say, look, my life's going in this way. I was heavily involved in mergers and acquisitions as well at the time, and I wanted to leave as a good leaver. So she said, well, can you please stay for another 12 months? A lot of acquisitions, all about the cultural integration. So I stayed an extra 12 months. But the interesting thing for me was the moment I sat down with my wife and said, I'm leaving the business, it was like a switch triggered. My employer was now funding my exit strategy. I still worked just as hard, but 3 months later I negotiated terms and stayed for another year.
Well, I mean, it says a lot about you that you stayed for 12 months, because it's when you decided to leave somewhere, it's very hard to get up and have that same drive every day. So fair play to you for doing that, because I think a lot of people, they check out as soon as I notice people if they resign from the businesses I own, you really get the measure of someone by how they behave after they've resigned. It's quite unusual.
And it's not what you do in life, it's how you do it as well.
Yeah.
And anybody who's been involved in the integration of mergers, that integration of cultures, quite often it means people changes, and we all know what that can mean as well. Yeah. And I'd rather fulfil that and look people in the whites of the eyes and manage that.
And so in terms of your financial independence, how did that, so you've left your corporate job.
Yep.
What did that process look like?
Yeah, so I left May 2015. I was very well looked after in corporate life. I didn't want to bask on my laurels. I wanted to focus on cash flowing assets. So I bought 16 assets in about 5 months. I live in Surrey. I went north for cash flow, bought a lot of assets, developed them, and really hit it hard. But I made one mistake.
Go on.
And I saw the grass was greener on the other side and decided to travel 200 miles to do it. And as we both know, you can actually live and operate in the same area, and there are a huge amount of potential. So those 16 developments or 16 individual assets, there wasn't a 17th and an 18th 200 miles away. I've kept them all within 45 minutes, an hour of where I live.
Fine. So just so I'm clear on your sort of strategy right then, you whereabouts up north were you buying these assets?
On the M62 corridor.
Right, okay. Yeah. So and I think one key consideration whenever you're buying, like I've looked at buying stuff up north as well, I think most people in property probably have, and you really do need a critical mass. I mean, 16 is probably enough, but if you have 1 or 2, people don't realise if you're getting £400 or £500 a month rent from a small house in Macclesfield or whatever, you go up once, stay in the hotel overnight and drive your fuel, it might be 20-30% of your gross rent for the month.
Yeah.
You do need to have a number.
And it was even more than that for me, because it was all about my return on time employed. So that sucked the life out of me. But I wanted to create a legacy, and by establishing this asset class 200 miles away, my kids couldn't recognise these assets, hadn't been there. They were in their 8, 9 through to 13, 14 years old at that time. And I was doing that so that this hard asset class of property resonated with the kids. And I misjudged that, to be honest, not afraid to say that, but I reacted very quickly and now generally focus around the home counties on developments.
And you still got those, when you say development, did you keep them or you sold them off?
I guess like any fund, you churn the assets, you keep the performing ones and you get rid of the underperforming ones. So we've done quite a bit of churning through our family office, so that's what we do.
And what have you got now in Surrey in terms of what you're working on?
So since leaving corporate life, so in the last 10 years, we've developed over 300 apartments.
Wow.
And we sold 200, we've retained 100 units. We've got a growth plan to 2030 of acquiring another 1,000 units. And to be honest, I think we're lowballing that. We have to shift with the economic climate. And the challenge we've had with developments is the world can shift underneath your feet in that 18 months, 2 year period that you're doing developments. So we're increasingly looking at completed assets, buying blocks of apartments.
Getting a discount presumably for buying a whole lot.
Exactly, buying
economies of scale
there. Yeah, we're buying on a yield basis, looking at that aggregated portfolio. But my skills, whilst I am an engineer and I was heavily involved in power stations, data centres globally, I've also been an investor in businesses, and it's the business of property that really inspires me rather than the actual physical asset. So each day it's working on the business of property.
So Mark, let's also talk a little about Sustainomics Capital and the background of that, just for our listeners and viewers.
Yeah.
Tell us a little bit about that.
So over the last 10 years, I've had to become very adept at finding deals and finding the funding, and they're the two core elements for any developer, as we both know. My particular function and role in raising over £30 million of private investors' capital, that equipped me with a lot of skills, a lot of connections, a pretty hefty black book, so that we're in a position where we can enable and fund any deal that we want. That's what we'd like to be in. But obviously your strategy changes over time. We're doing larger developments now. The largest one will be about 20 million GDV. We'll do a few smaller ones as well, but it's the completed assets that cash flow day one. That's what really interests me. In order to do that, we're stepping up. We're working with REITs, funds, private equity. But I've still got a lot of private investors who are saying, Mark, how can I invest funds? So over the last 6-7 years, Sustainomics Capital has been that linkage and that introducer between those that have the money to invest and those that want investment. Now some people, as we know, aren't maybe ready to receive that investment, so it could be as a board consultant, helping them, supporting them, get ready to be investable.
Sure. And with Sustainomics, it's also, you're dealing with SSAS, I'll start that again. With Sustainomics, you're also dealing with SSAS pensions. Do you want to tell us a little bit more about that?
Yeah, so I call them SAS pensions. To me, it's all about structuring and tax efficiency, because property, right, it's just a vehicle to get you to a better place. It's a great vehicle, love that. I've always pushed myself as hard as possible, really trying to understand the bottom of my reserve tank. There's a real psyche there. So one of the things that I said to myself was, right, I'm challenging tradition on absolutely everything. And that was 30 years ago. What are those conditions in 2015 when I left corporate life? I'm going to take control of my pension. Now I'm 44. The 25% tax-free didn't exist then in UK pension law. So I set myself that task. I'm going to control my pension. I gave myself a year to do it. Had no idea really about SIPs, certainly knew nothing about a SAS. Set to work, expand my connections, found out this amazing thing of SAS. Great position to be in, not right for everybody, I have to say. And that really drove us very hard to transform our family office into a trust. That then enabled me to put a lot of rocket fuel into all the business pursuits I've got, investing in businesses, investing in management teams. But for me, That SSAS was about structuring, it was about independence, about taking control. And for those who maybe aren't aware of what a SSAS is, you know, between 1 and 11 trustees, you become the trustee, you take total and utter accountability and responsibility. You'll need a great corporate trustee to sit there with you, because we don't want to be a pension manual expert. And it's approved by HMRC, and it has been around since 1973.
Really, that long?
Yeah, it's not a new thing, you know, a harebrained scheme. It's part of trust. You know, trust is the oldest form of law in the UK. And to me, that was fantastic. And rather than kind of keep that under my hat, I fulfilled a lifelong passion of mine of writing books. So I decided to create an amazing community and also write some books on the subject as well.
Right. Because with SSAS pension schemes, and I'm not giving out any financial advice here, I should say, but we were talking earlier and I said that I'd just set my one up. My father was an insurance salesman, pension seller for many years. So for my whole adult life, he's been saying to me, you must have a pension, you must have a pension. Of course, he's right. Yep. So I finally got set one up. And I was quite amazed at how flexible they can be, and you can do a lot of great things in them. But a lot of people just don't know about them. That's the thing. I speak to a lot of my friends who have got businesses or entrepreneurs, and they're like, oh, I have no idea what that is. I said, well, I think you should look into it.
That was a frustrating thing for me. I've always had IFAs for 25 years in my corporate life, and not once did my IFA tell me I could have a SSAS. And you know what? There's no fees in it for them.
Yeah.
Now, I think they should go away and have a good, long, hard look at themselves in the mirror there. But when you describe whole of market, it's not. It's whole of market of products they want to sell you. And I was just fed up of being a cog in somebody else's wheel, quite frankly. And that emergence of that independence, taking control, throw your shoulders back, grow 2 inches, and seize the moment. And I absolutely love that.
Good for you. And you mentioned about book writing. So what's the goal behind your writing? Because you've written, I think, 6 books?
Yeah.
Best-selling books, I should add.
Thank you. 6 books. Look, I was 8 years old when I can remember Mum taking me into Smith's and buying a first Hardy Boys book, and she always encouraged us to write books. Those. And I've always had a 35-year itch. I wanted to scratch, you know. But when you're in corporate life, it just consumes you. You know, they just want to wrap you in cling film and mould you to how they want you to be. And I just didn't have the mental bandwidth to do that. And I sat on that for all of my teenage years and my 25 years in business. But when I left corporate life, now the shackles were off, right? Yeah. I could breathe and I could do what I want, when I want, with who I want. And I absolutely love it. It's my release.
Absolutely. So you've written 6 books. So what are the various, you don't need to reel them all off, what are the various subject topics?
So 2 of the books are on property development, commercial conversions. We've done an awful lot of that over the years. I've written 3 books on different flavours of SSAS pensions and how you can integrate SSAS pensions with property, the do's, the can-do's. I'm not regulated here, it's not advice. This is just me coming at it from an honest guy in the streets, you know, experiences, which hopefully helps people to ask the informed questions to their advisors who maybe have been lacking in their lives previously. And then finally, I wrote a book called Advice to Your Younger Self. I've got 4 kids, and I thought it'd be a great idea to reach out to 50 people that I know, like and trust over my career, and ask them to write one single chapter on, given all of your experiences to date, take yourself back to your teenage years. What advice would you give to your younger self? And you get this real eclectic array of feedback. And that was an incredible experience, and all the proceeds go to charity as well. So,
was there any advice in that book that you think was the one best? If you had to pick one thing out that wasn't your own, what it would be? I know we'll do some quick fire stuff at the end, but
there was a theme that came out. It's quite a recurring theme, and that's to do something that you loved. Yeah, you know, that was a regret that most people had, and therefore the advice was just find something you love. Yeah. And I was having this conversation with my daughter recently. She's about to choose her subjects for A-levels. It's like, you know, it's just a gateway to get you to the next level. You know, don't sweat stuff you don't enjoy. Just find something you absolutely love.
Because I'll tell you what, when you're running businesses, as you know, when you get up at 5, 6 a.m. to go to the office, as I do, as I'm sure you, maybe not so much anymore if you're trying not to do it so much, but certainly you would have done a lot. You really do need to love it, otherwise it just becomes an absolute grind, working 6, 7 days a week.
Yeah, it's that freedom of choice, and that was one of the challenges, that tradition I wanted to challenge in, all those years ago, was I'll only do what I really enjoy. Now, of course, we all have to roll our sleeves up every now and again. I mean, that's, there's choppy water in every walk of life. But having that passion, it holds you above the waterline. It really drives you through. And when you know what you're doing it for, and that vision there, it becomes a potent force of nature.
Well, I think I better read your SSAS books, because might be some good information in there for me. And out of those books, which has gone down best, do you think, with your readership? Is there any particular aspect, residential conversions, commercial to residential, for example?
I suppose the commercial to residential conversions, because I just poured everything into that. That was my first book. That was a work of real passion for me. And the property and SaaS secrets, because that took the basic knowledge of SaaS, and therefore how can you apply it to various property strategies.
And you've talking about your SaaS again, you doubled your pension in only a couple of years, is that correct?
Yeah.
So how did that come about?
Had my pension for about 24 years, and I set up my SaaS, and then we went shopping. We put the fuel in it, transferred the pension across, and then we went shopping, and we found 5 commercial properties in Colchester. Actually, we went to visit one property, and it was to let. So this property was to let, and we asked the agent, we said, look, we don't really want to buy it, don't really want to let it, but we wouldn't mind buying it. Who owns the properties on either side? He said, I don't know. I'll go and find out. Next day came back and said, well, the gentleman's in his 70s, and he not only owns the property either side, he owns the 2 at the front as well. So there's 5 properties. So we actually bought a set of properties here where the vendor didn't even know they wanted to sell. And our professional team...
Off market.
I mean, off market,
Totally.
yeah, they didn't even know. All they had was a distress flare went up. We got a vacancy, call to the commercial agent, get a new tenant in there. But by asking the right questions, informed questions, we got a great deal. I mean, they wanted £1 million and we didn't.
This is for all of them.
Yeah, for all of them.
Yeah.
And we developed those. It was a conditional offer, subject to planning. It was in a conservation area, and we wanted to put 3 apartments in the uppers. And as soon as we got the full planning through, we legally completed.
Amazing.
Did all the splits and everything, and yeah, we in 24 months, end to end of that process, in 24 months, we doubled our pension that had taken me 24 years.
Wow,
to accrete.
you were happy after that?
Yeah.
Better result, isn't it?
And it added to that self-belief, confidence. It proved the model.
Yeah, absolutely. And so, just talking about the SaaS, if you're buying and you're leveraging, you are limited, aren't you? To there's maximum amounts that you're allowed to leverage. It's not like when you're an individual where you can just go out and borrow 75% LTV. Isn't it 50% is the maximum?
So it's 50% of the net asset value of the fund itself.
Exactly. Yeah.
From a prudency perspective, we wouldn't gear up any more than 50% of the individual asset. Then you're always within the tolerance levels. We tend to buy in cash, though. We don't really use the external leverage.
Yeah.
And I think when people think leverage, they think banks getting a mortgage. But it actually could be a collaboration with another SaaS trustee, and they could loan the money in on a third-party unconnected loan. So the dexterity and tenacity you've got, the agility, it just gives you so many options. Just love it. Yeah,
no, absolutely. And I was having a look online at Sustainomics Capital and the mentorship. You get really great reviews from a lot of people. So what do clients say that helps them the most with the business?
Yeah, I think they like the nitty gritty. I'm time served. I've built £200 million data centres, 1.5 billion of infrastructure around the world. I've been there and done it. I don't know everything, absolutely. I'm learning every day, but I can bring that real world experience of funding solutions to them. They've got access direct to me, and predominantly, they're well equipped to find developments, find deals, but it's bringing that all important debt and equity. I'm not a broker. I'm not going to bring the institutional finance there, but it's that missing equity piece, the mezzanine piece, and I help them become very eloquent in how they can set their vision. And I think most people start with a deal, but every investor I know, they don't want to do a one-off deal. What they want to understand is there a pipeline here? What is your overall vision? Is it 100 homes in your local community? So it's given them the solid building blocks, so they're building their business on granite, and then I can help them get all the capital they need to fulfil their vision. That's what I love doing, and not necessarily in property. It's in business as well.
And I'd imagine all that experience that you've got is coming in very useful at the moment, because we've got higher rates. Certainly they're coming down this year, but over the last 2-3 years, short term or medium term, they've gone up quite considerably. And other cost pressures, build costs have been going up over the last 5 years. I think astronomically over, although they have come up and down. How do you think developers should adapt their strategies with these tougher times that we're facing?
Well, I think you've hit the nail on the head. They've got to adapt.
Yeah.
The fine tolerances there of valuations, the unpredictability of valuations, down valuations, reducing loan to value. You need access to more capital than you actually originally think. So to me, you've got to have all the options out there. And change is the only constant in life. There's constantly going to be change. I sold my shares in a business back to a PLC in 2008, about 4 months before the financial crisis hit. And if you think what's happened since then, we've had Brexit, we've had
one thing after another, isn't it?
Yeah, Sustainomics. We've had it all.
Trump.
But you know what? The next Trump. The next 6 months, 5-6 years are going to be the same. We just don't know what they are.
Absolutely. I don't see things changing particularly overnight, if I'm honest. And I think, this is one of the only times I've been in property 21 years, not as long as you, but a fair time. I've seen a couple of cycles, and it's one of the only times I've seen where I think there are some really good buys to buy. It's very rare that the market, you get really good times that are really buyers' markets, and this is very much one of those, especially where I operate in central London, prime central London, on a real basis. Prices are probably down 40% in real terms from 2014.
Yeah.
I mean, it's crazy, really. So it's a bad time to be selling, I guess, but a great time to be buying.
Yeah, but if you're forced to sell in this market, you're going to take a bath, aren't you?
Yeah.
I spent many years, probably about 20 years, being a corporate troubleshooter. So I was the one that would get the call saying, Mark, could you just? And it would be some god-awful corporate firestorm somewhere in the world. But I think that real-world knowledge of how to handle yourself, how to be calm under pressure when things happen, how to coordinate things with the bank, being open, work with investors, it's so important. And I feel privileged of not just creating businesses, but scaling up, acquiring, and also selling businesses as well.
Yeah.
It brings that knowledge which helps my clients in their growth strategy.
And are there any particular strategies at the moment you think are good ones to be following, or that you personally view as the better ones?
Yeah, well, sadly, there's quite a lot of distress in the marketplace there. If you're a developer and you've got 20, 30, 40 units out there and looking to sell anytime soon, you're coming to the end of your development finance facility, you need options. And what we're doing at the moment is acquiring finished blocks of apartments, entire housing developments. That to me, it cash flows day one. Yes, you're buying at wholesale rates, but it gives people that exit to move on.
Yeah.
There's a high attrition rate on the tendering for those. It's very much an off market, very discreet transactions there, but it helps people move on. And that's exactly the same with our business acquisitions as well. We're looking to acquire businesses. We never acquire distressed assets. We acquire from distressed vendors.
That makes sense. And when you say you're acquiring businesses, because as I chatted to you earlier, I acquired a part of a wooden flooring business last year, so I've been doing the same thing. And what sort of businesses are you looking for in particular?
Yeah, look, boring run-of-the-mill businesses that will never go out of fashion.
Sure.
M&E businesses, engineering businesses. We've got a business, it's all about scale and growth. We've got a quantity surveying, cost management consultancy business, which has done incredibly well, but it's now reached almost the ceiling of its capacity. So we need to scale and grow, and we're going to be franchising that organisation. So that's the exciting next few months.
What's that called? Do you want to name drop?
Yeah, that's called the QS Company.
The QS Company.
They work nationwide.
Right.
So really enjoy that scaling and growth. I really like the social impact space as well, bringing social impact funds rather than capitalist funds from the bank that has a very clear purpose-driven ESG purpose behind it. So we're looking at acquiring a number of businesses in the social impact space as well.
And how involved do you get in these purchases yourself?
Well, I don't want a job. I'm a shareholder. I'll be the non-exec. My skill over the years has been growing management teams, and that's what I do. I identify great talent, back great talent, take all the roadblocks out of their way to enable them to rise.
Yeah.
And I think that's where we didn't call it mentoring at that time, but back in the mid-90s, I was growing teams of hundreds of people. And I've only had 2 jobs in my life. I've had dozens and dozens of roles, and being a corporate troubleshooter as well, you'd get the call and have to head off to sort something out at any time. So I had to have that succession plan right from day one. So that meant giving people who reported to me as much autonomy as I possibly could, and enable them to really rise and grow. And my first employer who is now a billionaire. He's an American, and if you know anything about the American culture, throw you in at the deep end.
Hard work.
Yeah.
Long hours.
Yeah. But that responsibility.
You get paid well, and they pay back, don't they?
And all I wanted in my early 20s, I wanted responsibility. And if you've got the courage to take a step forward and embrace whatever business requirement is, rather than take a step back and hopefully somebody else will take it. If you've got that courage there. So I've always led with courage, always led with humility, and I happen to think humility is one of the strongest strengths in business.
Absolutely. And you mentioned legacy, and what legacy are you aiming to build through your work?
Okay, so legacy for me, I prefer to choose the word custodianship. My family are number one to me. We've seen how the legacy of a lottery win can destroy people, shirt sleeves to shirt sleeves in a matter of years. I don't want that to happen to my kids. And despite me telling them it's all going to the cat's home, I'm actually curating and nurturing their skills, really. So they don't take anything for granted. They became shareholders in our holding company around about the ages of 7 or 8. They're potentially becoming trustees. They won't be trustees in our SSAS, because I think somebody in their 50s will have a very different risk appetite to somebody in their 20s. But it shows back to the point on SSAS pensions. Most people think a SSAS is looking back. Well, how much do I need to set a SSAS up? It's always like reverse engineering. But actually a SSAS is about forward looking. And the youngest person I know who's got a SSAS pension was 19 when they set it up. Now clearly you haven't got a pension at 19, but they set it up as a forward thinking vehicle.
Absolutely. Well, if you can compound things from 19 years old, I'm probably unlikely to retire till I'm 70 if I do retire at 70. That's just 51 years of compounding. It's a seriously powerful thing.
Incredible, isn't it?
Over that time.
And that's the advice to the younger self, isn't it?
Absolutely. I wish I'd set my pension up 10 years earlier.
Yeah.
I think everyone does.
And it's that joy of, when I pass and the kids get that white envelope in the solicitor's office, there's no shocks there. I'll have already done the baton change. I'll have enjoyed that custodianship. Seeing them take our great work, but make it better. Double, treble it, whatever they want to do with it. But I'll be there to help steward that. I'll be their non-exec director as well as their dad, if they want to go down that route.
Sure. Well, it sounds like you're using your financial acumen as a way to educate them and train them up as well. So it's kind of not only making you money, but they're learning from it and will make money from it. So it's kind of waterfalls down through the family.
It's real life stuff, isn't it? The kids will never hear what you say, but they'll always remember what you did, what you showed them. So it's putting them in action. Emily was 7 when she became a shareholder. And she didn't know anything about being a shareholder, but I did that because by the time she's 18, I want her to know more about being a shareholder than I did when I was 18.
You're not looking to adopt a 39-year-old, are you, by any chance?
I work closely with anybody, no matter what age.
And you advocate for creating shared value. So do you want to explain a little bit more about that as well?
Yeah, shared value. We took on board the principles of ESG 15 to 20 years ago now. I firmly believe that business has to step up and create value, not at the expense of others, but by contributing back to people, planet, profit. So that creating shared value. I think a great example to the Developers Club podcast here is, if I'm going to do a development and it's £1 million, I'd ask that question: how much profit is there in a development? And most people will say £1 million, or they might give it as a percentage of 20, 25, 30%. But that's not the question I asked. The question I asked was how much profit is there in the development, not for the developer. So are the banks going to make a profit? Yes. Are investors going to get a return? Is the QS, the architect, the structural engineer, the contractor? We are the catalyst as a developer. If we don't step forward and take a risk, an educated, eyes wide open risk, and take on board that development, nobody makes any money. So that's for me, that's really important, that we are the custodians of that creating shared value, and it shouldn't be at the expense of the planet's natural capital. It shouldn't be about degrading equality in the world. There's a time to do the right thing, and that's in every business decision we make.
So it's interesting you say that, because something I've learned through my business career is that often the best deals are the deals where everybody wins. The estate agent gets a big fee. The person selling that was in financial trouble gets to retire abroad with the money they've got left in the property. You get a great deal, and then you make money doing it, and everyone wins. And a lot of people think that, well, surely you've got to. If one side's gaining hugely, the other side has to be losing hugely. But that's not actually the case. Yeah. So I couldn't agree with you. Couldn't agree with you more.
It needs to be an equitable equation. Yeah. And when we were talking to our commercial agent about that one property that we bought in our SSAS that I mentioned earlier on, what was the fee that lettings agent was going to get for finding a new tenant? A few £1,000s, I don't exactly know. But the returns they ended up getting were they had 5 sourcing fees for the 5 properties we ended up buying. We renegotiated all of the leases, so they got 5 more fees for that. We get them to manage the lettings on those 3 apartments. And we extrapolated that out, and they got a 28-fold increase in fees rather than the original tenancy they would have got. Yeah. So, it's just different ways of looking at it and sharing that information with people. And that vision there is really healthy. If you get the vision right and it's based on social impact, purpose, and creating shared value, you can completely disrupt the capital stack. And to me, that means driving down your weighted average cost of capital, reduction of personal guarantees, and by really embracing that social impact space. So it has a direct correlation economically as well as heartfelt.
That's great advice. So just to close things off and have a sort of quick fire round of questions. So what's the biggest risk you've taken that paid off?
I think leaving corporate life, but we've already covered that. So taking up ultramarathon running and running across the Sahara Desert. That
amazing. How long's an ultra normally?
Anything over a marathon, but typically it'd be 50k. So I ran 280k across the Sahara in 50-degree temperatures.
Is that Marathon des Sables?
Yeah. I did that way back when.
One of our members actually completed that.
Yeah.
A solicitor of mine has done it, and it's very not easy, is it? That's for sure.
Not easy at all. You learn a lot about yourself, and I think that's the thing that comes out of it. You come out of it stronger. more resilient. Absolutely love that.
Absolutely. Well, I think there is definitely a crossover between stamina in business and stamina to push yourself physically, because it's all mental, isn't it, at the end of the day?
Absolutely,
so it does follow through, I think.
Yeah, when you're running and you've run for 17, 18 hours and your whole body just screaming to just curl up and lie under a hedge and go to sleep, what's that power of the mind and the body that spurs you on, drives you on to take that next step, get to the next gatepost, get to the next rock? Yeah, it's incredible what we can all deliver.
Absolutely. What's the best deal you've ever done?
I think the one we did in our pension was absolutely tremendous deal. Was it a unicorn deal? I'm not so sure. But I think investing a relatively small amount of capital and becoming a non-exec director with the QS company as well, I think that's about to be a absolutely phenomenal business nationwide and probably internationally as well.
Fantastic. And the worst deal?
Worst deal, I bought a block of 10 apartments in the north when I left corporate life. It took me away from my family.
Yeah.
Financially, it was fine, but the impact it had, so got that one wrong, but still made a few quid.
Sure. And what did you learn from that?
To invest.
Other than not to do it again.
To not to do it again, yeah.
Yeah,
and I was reminded by that by my wife on a regular basis. To have very clear boundaries. If you don't know where you're going, nobody else knows where you're going. So rather than just hawk around for a great deal anywhere, just be laser-like clear, know thyself, what your strategy is. So I retracted everything into generally home counties if we're developing. If we're buying completed blocks of apartments, 20, 40, 60 apartments at a time, they can be anywhere, because the advantages of doing that for us is we've set up our own asset management business. So we deal with all the lettings, property maintenance, block management ourselves.
Nice. And what's, in terms of investing, what's a common pitfall, the most common pitfall do you think that investors make?
I think people get frustrated with short-term returns. We spoke earlier on about the power of compounding over time.
Yeah.
There is always going to be some choppy water from time to time. I think one of the most damaging things in social media is the ranting, raving culture. You know, you and I have both been in the businesses of property for many, many years. When things do get a bit touchy, you need people to, be calm, put the tin hat on, fix bayonets, and work together to solve the problem, not to throw rocks at each other. So, to me, taking a longer-term view with people you want to be doing that with.
Okay, and what about one book or thinker that's inspired you the most or influenced you the most?
I'm an avid reader of books. I consume them, 200 books a year.
Really?
I absolutely love books, listening to them and reading them. And I'm sure many of your guests have mentioned many self-development books. For me, it was a book that probably nobody's ever heard of. It was in the early 90s. It's by an author called Adam Ballinger. And he wrote a book called The Quiet Soldier. And he was a banker in finance in the city, and he wanted to do something more. And he joined 2-1 SSAS, and it's a story of him going through selection. And back to my point earlier on of getting the most out of life, the zest out of life. He had no time. He was a banker in the city, but he found time to go through one of the most arduous selection processes. So look, if you think you can, you think you can't, you're probably right. And it's all about the mindset.
I'll definitely, I wrote it down there, I'll definitely check it out.
I'm not sure whether it's even in publication.
I might get a second-hand copy.
Give me a shout, I'll lend you mine.
Thank you. And in one word, what's the future of property?
I think the future of property is absolutely essential for UK PLC. The building blocks need to remain. There will be volatility in the funding markets, geopolitical tensions and pressures, but if you have got hard assets, ownership of assets, control of those assets, that is a place to be for many decades to come, and I wouldn't want to be in any other sector.
Fantastic. Mark, thank you for joining us.
Thank you, Ben.
I'm your host, Ben Wilson, and this is the Developers Club podcast.